Have you ever worried that your Social Security benefits might suddenly stop or that you could miss out on money you're entitled to? If you're a senior relying on Social Security, this video is a must-watch because missing the critical September 30th deadline could cost you thousands of dollars and jeopardize your financial stability. Stick with me until the end to learn the essential steps you need to take to protect your benefits, avoid costly delays, and ensure your income remains secure. Don't let a simple oversight derail your retirement. Before we begin, I would appreciate it if you like this video. You can help me continue to spread the old age lesson. If you haven't subscribed yet, I recommend you subscribe and turn on the bell so you don't miss any videos. If you like this video, please comment number 1. If you don't like it, comment number 0 to let me know, so I can make a better video for you. Now let's get started. Why September 30th matters for your Social Security. The end of the fiscal year is a time when the SSA scrutinizes its records to ensure accuracy and compliance. This is when discrepancies in your Social Security account, such as outdated personal information, errors in your earnings history, or unprocessed paperwork, are most likely to surface. If an issue is identified during this period, it can lead to significant consequences, including delayed payments, reduced benefits, or even account status complications that could take weeks or months to resolve. For seniors living on fixed incomes, where every dollar counts, these disruptions can create financial strain, emotional stress, and uncertainty. Consider this date a critical checkpoint in the government's financial operations. It's akin to a business balancing its books before starting a new accounting period. If your Social Security records are not accurate or up to date by September 30th, you risk entering the new fiscal year with unresolved issues that could jeopardize the timely receipt of your benefits. Conversely, taking proactive steps before this deadline can provide peace of mind, ensuring your income stream remains secure as the government transitions into the next fiscal year. Common issues and their consequences. Seniors underestimate the importance of maintaining accurate records with the SSA, often assuming that the agency has everything under control. However, seemingly minor oversights can lead to significant problems. Below are some of the most common issues that can arise if your information is not updated by the fiscal year end. Outdated personal information. One of the simplest yet most critical steps is ensuring that your personal details, such as your mailing address, phone number, and banking information, are current in the SSA's system. For example, if you've recently moved, perhaps to downsize or be closer to family, failing to update your address could result in missing crucial communications from the SSA. These might include notices about benefit adjustments, Medicare enrollment deadlines, or alerts about potential fraud. Missing even a single letter could lead to missed deadlines or overlooked actions that affect your benefits. Banking information errors. Most seniors opt for direct deposit for their Social Security payments, which is both convenient and secure. However, if you've changed banks, opened a new account, or closed an old one without notifying the SSA, your payment could fail to process. A bounced payment doesn't automatically trigger a resend. Resolving the issue can take weeks or even months, leaving you without critical funds. For instance, imagine losing access to 2 months of benefits, potentially thousands of dollars, due to an outdated bank account number. This is a preventable issue that can be addressed with a quick update. Unverified contact information. A current phone number is essential for the SSA to reach you if they need to verify information or resolve an issue with your account. If they cannot contact you promptly, actions on your account may be delayed or suspended, further complicating matters. A simple phone call or online update to confirm your contact details can prevent these disruptions. The power of a simple check. Taking just 10 minutes to log into your My Social Security account, available at ssa.gov, or calling the SSA's helpline 1-800-772-1213, can save you from a world of stress. During this check, confirm the following. Mailing address. Ensure it reflects your current residence to avoid missing critical notifications. Phone number. Verify that the SSA has a working number to reach you. Direct deposit information. Confirm that your bank account details are accurate to ensure seamless payment delivery. This small investment of time acts as a powerful safeguard, protecting your benefits from delays or interruptions as the fiscal year closes. By addressing these details before September 30th, you can start the new fiscal year with confidence, knowing your financial lifeline is secure. The importance of reviewing your Social Security benefit statement. Critical step is reviewing your Social Security benefit statement, which details your lifetime earnings history, the foundation for calculating your monthly benefit. Many seniors glance at this statement without scrutinizing it, assuming the SSA's records are accurate. However, errors in earnings records are more common than you might expect, and they can have a profound impact on your benefits. For example, consider the case of a retiree who discovered a missing year of earnings in her SSA record. She had worked full-time that year, but the SSA's record showed no income, resulting in a monthly benefit that was $92 lower than it should have been. While $92 might seem modest, it accumulates to $1,104 annually. Over a 10-year retirement, this error would have cost her over $11,000, a significant loss for someone on a fixed income. By reviewing her benefit statement and providing proof of earnings, such as W-2 forms, tax returns, or pay stubs, she was able to correct the record and secure her rightful benefit amount. The SSA does not proactively notify you of discrepancies in your earnings history. It's your responsibility to identify and correct errors by submitting documentation. September 30th is a pivotal deadline for this task, as catching and resolving errors before the fiscal year end ensures your benefits are accurate moving forward. To review your statement, log into your My Social Security account and examine your earnings history line by line. If you spot inaccuracies, gather your supporting documents and contact the SSA immediately. Don't let the money you've earned slip away due to an administrative oversight. If you are still watching this video and finding these lessons useful, please comment number 1 below to let me know that you are still watching this video with me. Thank you for your valuable time. The federal budget and potential government shutdown September 30th also coincides with the federal budget process, a time when Congress debates funding bills to keep government operations running. These discussions occasionally stall, leading to government shutdowns that can disrupt SSA services. While Social Security payments are considered mandatory spending and typically continue during a shutdown, other services, such as processing new claims, handling appeals, replacing lost Social Security cards, or updating benefit records, can face significant delays due to reduced staffing or office closures. For example, if you need to update your banking information, file for retirement benefits, or appeal a denied disability claim during a shutdown, what might normally take days could stretch into weeks or longer. To avoid these delays, take action before September 30th. File new claims early. If you plan to apply for retirement, disability, or survivor benefits, submit your paperwork well before the deadline. Update records promptly. Ensure all personal and banking information is current to prevent payment disruptions. Address appeals or changes. If you need to appeal a decision or report a change in your benefits, don't wait until October when a potential shutdown could complicate matters. Practical steps to prepare for September 30 to safeguard your financial security. Take the following steps before the fiscal year end. Access your My Social Security account. Visit ssa.gov to create or log into your account. This portal allows you to review your benefit statement, update personal information, and check your payment status. Verify key information. Confirm your address, phone number, and direct deposit details. If you prefer not to use the online portal, call the SSA at 1-800-772-1213. Review your earnings history. Check your benefit statement for inaccuracies in your earnings record. Gather documentation, e.g., W-2s, tax returns, to correct any errors. Act early on claims or appeals. Submit any pending applications or appeals before September 30th to avoid potential delays during a shutdown. Stay informed. Monitor news about the federal budget process, as a potential shutdown could affect SSA services. The bigger picture September 30th is more than an administrative deadline. It's a personal milestone that directly impacts your financial well-being. By taking proactive steps now, you can avoid the pitfalls of delayed payments, reduced benefits, or unresolved account issues. For seniors, Social Security is often the cornerstone of financial stability, and protecting it requires vigilance. A few minutes spent updating your information and reviewing your records can prevent costly mistakes and ensure your benefits flow smoothly into the new fiscal year. Don't let this deadline pass unnoticed. Act before September 30th to secure your financial future, avoid unnecessary stress, and maintain the peace of mind that comes with knowing your Social Security benefits are protected. Your financial stability is worth the effort. The importance of preparing your Social Security paperwork before a potential government shutdown. Having all your Social Security paperwork submitted and processed in the system well before a potential government shutdown is a critical step to safeguard your benefits and avoid unnecessary delays. Think of it as securing your spot in line for a train that's about to depart. If you're already on the platform with your ticket in hand, meaning your applications, updates, or appeals are filed and acknowledged by the Social Security Administration, SSA. You're in a strong position to weather any disruptions. However, if you procrastinate and try to submit your paperwork during or after a shutdown, you could find yourself stuck, waiting for the government to resolve its budget disputes before your case can even be considered. A government shutdown, which could occur if Congress fails to pass a budget by September 30th, halts non-essential federal services, including many SSA operations. While Social Security payments for existing beneficiaries typically continue, new applications, appeals, or changes to benefits, like updating your direct deposit information or reporting a change in marital status, can be delayed significantly. This delay could mean weeks or even months before your case is processed, potentially disrupting your income or benefits. For example, if you're applying for disability benefits or trying to correct an error in your payment amount, a shutdown could leave your case in limbo, creating financial strain. To illustrate, consider a retiree who needs to update their banking information due to a closed account. If they submit the change before September 30th and it's processed, their benefits will continue uninterrupted. But if they wait until October and a shutdown occurs, the SSA might not process the change until the government reopens, potentially causing missed payments or returned funds. By acting now, before the fiscal year ends on September 30th, you ensure your Social Security needs are already in the system, protected from the uncertainty of congressional budget battles. Visit the SSA's website or your local office to confirm your records are up to date, and don't assume everything is fine just because you haven't received a notice. Proactive preparation is your best defense. Understanding the tax implications of Social Security benefits. One of the most overlooked aspects of Social Security planning is how your benefits can be taxed, a reality that catches many seniors off guard, often with devastating financial consequences. After decades of working and contributing to Social Security, it's disheartening to learn that the IRS may tax up to 85% of your benefits, depending on your total income. Without proper planning, you could face a hefty, unexpected tax bill in the spring, forcing you to dip into savings, incur penalties, or even negotiate payment plans with the IRS. Here's how it works in detail. The IRS calculates your combined income, which is your adjusted gross income, AGI, from sources like pensions, part-time work, or investments, plus any non-taxable interest, such as from municipal bonds, plus half of your Social Security benefits. If this combined income exceeds certain thresholds, $25,000 for single filers or $32,000 for married couples filing jointly, then a portion of your Social Security benefits becomes taxable. The higher your combined income, the greater the taxable portion, with up to 50% of benefits taxable at lower thresholds and up to 85% at higher ones. For example, a married couple with $40,000 in combined income might see 50% of their benefits taxed, while a couple with $60,000 could face taxation on 85%. Why is September 30th a critical deadline for addressing this? The end of the fiscal year is a natural checkpoint to review your financial situation before the final quarter of the year. By assessing your income now, you have time to adjust your tax strategy before December 31st, when the tax year closes. One powerful tool at your disposal is voluntary tax withholding from your Social Security benefits. The SSA allows you to have 7%, 10%, 12%, or 22% of your monthly benefit withheld for federal taxes, ensuring you don't face a large tax bill later. Many seniors are unaware of this option and receive their full benefit checks each month, only to be shocked when they owe thousands at tax time. For instance, imagine a retiree receiving $2,000 monthly in Social Security benefits, plus $20,000 annually from a pension. If they don't withhold taxes, their combined income could push them into a taxable bracket, resulting in a $3,000 to $5,000 tax bill in April. I've seen clients forced to withdraw funds from retirement accounts, triggering additional taxes and penalties, or set up costly IRS installment plans because they didn't plan. To avoid this, file Form W-4V with the SSA to start withholding now. You can download the form from the SSA website or request it by calling 1-800-772-1213. If you're unsure about your tax liability, consult a tax professional or use the IRS's tax withholding estimator to run the numbers. By acting before September 30th, you can use the last quarter to balance your tax obligations, protecting your financial stability. Protecting yourself from Social Security scams. Few things are as distressing as seeing seniors fall victim to Social Security scams, especially around high-stakes deadlines like September 30th. If you are still watching this video and finding these lessons useful, please Please comment number 2 below to let me know that you are still watching this video with me. Thank you for your valuable time. Scammers are acutely aware that the end of the fiscal year creates anxiety about benefits, and they exploit this fear with sophisticated tactics. They might call, claiming, your Social Security benefits will be suspended after September 30th unless you verify your Social Security number. Others send emails or texts that mimic official SSA communications, warning of suspicious activity or demanding immediate payment to avoid benefit cuts. Some even spoof the SSA's phone number 1-800-772-1213 or create fake websites that look legitimate. Let's be crystal clear. The SSA will never call you unexpectedly to demand personal information, threaten to terminate your benefits, or request payments via gift cards, wire transfers, or cryptocurrency. These are hallmark signs of a scam. The September 30th deadline is particularly dangerous because scammers use the fiscal year-end as a hook, preying on seniors' concerns about government shutdowns or benefit changes. For example, a scammer might claim that a shutdown will freeze your benefits unless you confirm your identity immediately, tricking you into sharing sensitive information like your Social Security number, bank account details, or even a scanned driver's license. The consequences of falling for these scams are severe. I've worked with clients who lost thousands of dollars when scammers redirected their benefits to fraudulent accounts. Others faced identity theft, with criminals opening credit cards or loans in their names, ruining their credit and causing months of stress to resolve. To protect yourself before September 30th, take these critical steps. Secure your My Social Security account. Log into your account at ssa.gov and enable two-factor authentication, 2FA. This adds an extra layer of security, requiring a code sent to your phone or email to access your account, even if a scammer has your password. Verify suspicious contacts. If you receive a call or email claiming to be from the SSA, hang up or delete it. Then, contact the SSA directly at 1-800-772-1213 or through their official website to verify. Never share personal information with unsolicited callers. Monitor your finances. Check your bank and Social Security statements regularly, especially in late September and early October, for unauthorized deposits, withdrawals, or changes to your benefit details. Report any issues to the SSA and your bank immediately. Report scams. If you encounter a suspicious call or message, report it to the SSA's Office of Inspector General at oig.ssa.gov or by calling 1-800-269-0271. By preparing before September 30th, you can fortify your defenses against these predators. Your Social Security number is a key to your financial life. Guard it as fiercely as you would your home. Staying vigilant and proactive ensures scammers can't exploit the fiscal year-end to steal your benefits or peace of mind. Establishing a trusted contact or power of attorney for your Social Security affairs. One of the most heartbreaking scenarios I encounter is when a senior's Social Security benefits are disrupted because no one has the legal authority to manage their affairs during a crisis. Too many seniors delay setting up a trusted contact, representative payee, or power of attorney until it's too late, leaving their families scrambling when illness, hospitalization, or cognitive decline strikes. The SSA does not automatically grant spouses, children, or other relatives access to your benefits, even in emergencies. Without formal authorization, your loved ones may be unable to pay your bills, update your records, or protect your benefits. The September 30th deadline is an ideal moment to address this, as it aligns with reviewing your Social Security and financial records. Designating a trusted contact or power of attorney is like purchasing an insurance policy for your benefits. It ensures continuity and security if you're unable to manage things yourself. A representative payee, for example, is someone authorized by the SSA to receive and manage your benefits on your behalf, ensuring bills are paid and funds are used appropriately. A power of attorney grants broader authority to handle financial and legal matters, including Social Security. A trusted contact is someone the SSA can reach out to if they can't contact you or suspect issues with your account. Consider this scenario. A senior is hospitalized after a stroke and can't communicate. Without a representative payee, their Social Security checks might be sent to an inaccessible account, utility bills could go unpaid, and benefits could be suspended due to unverified changes. In contrast, if a trusted contact or payee is already in place, they can coordinate with the SSA to ensure payments continue and records remain accurate. I've seen families spend months navigating bureaucratic hurdles to regain control of a parent's benefits, all because this step was overlooked. To act before September 30th, start by identifying a reliable person, perhaps a spouse, adult child, or close friend, who can serve in one of these roles. Then, contact the SSA to set up a representative payee or trusted contact, or consult an attorney to draft a power of attorney document. You can find forms and instructions on the SSA's website or by visiting a local office. This small step can prevent chaos and protect your financial stability, ensuring your benefits remain secure no matter what challenges arise. That's it, seniors. We've covered the critical steps you need to take before the September 30th deadline to protect your Social Security benefits, avoid costly mistakes, and secure your financial future. From updating your personal information to guarding against scams and setting up a trusted contact, these actions can make all the difference in keeping your income safe and uninterrupted. So, what have you learned from this video that you're ready to put into action? Please share one key takeaway you'll bring to practice in your life in the comments below. I'd love to hear from you. If you found this video helpful, please leave your comment below, and don't forget to like, share, and subscribe to our YouTube channel for more tips to safeguard your retirement.